What's up, guys? It's Friday. Welcome to Joy of the Trade. It's been a week where there's some huge alarm bells going off in the markets and got me very nervous, specifically what came out of China. I've been watching China for a while. I've been watching the Communist Party in China ratcheting up their rhetoric against the West. But what changed this year, the one pivot they made that's been incredibly interesting and really important to pay attention to is the crackdown on their own companies. And what that means for not just Chinese stocks, but for worldwide assets and for things like the dollar, I will explain to you right now. And it's something that could unravel the entire stock market. So let me share my screen and I'll show you what I'm looking at. So if we look here at the FXI, which is the white and blue candle chart here, and then we have the SPY in burnt orange over here, we can see, if we look back 5 years, that every time you had these moves in the FXI, they led down the S&P. So China would get sold off, and then the S&P would follow. And it happened again, obviously, with COVID, and then the S&P followed. But when we look at what's happened recently, the S&P is sitting at all-time highs, more or less. We had a bit of a rough patch yesterday, this week, but the FXI has come off considerably from $55 down to $43, a 20% move since earlier this year. And the problem with that is if we look back even longer, check this out. You start to see that the big move, 2008 even, we peaked in China and then we started to collapse in China way before the S&P even figured it out. So the Chinese stock market is always, for me, since the early 2000s, kind of a leading indicator because of the fact that it's been a big growth component of the world economy. And if we look underneath the hood at what's in the FXI, which I just used as the Chinese barometer, you have Alibaba's almost 10%, it's 9% of the FXI. You got Tencent, JD.com. These are companies that have been cracked down. They literally put Jack Ma from Alibaba in a holding cell for months in China. These guys are not playing around. They mean serious business. But it's not just the FXI. If we look at some other US ETFs that might be under some duress coming up here, EEM is a massive one. This is an emerging markets one. This starts to look really saggy too. And if you look underneath the hood at the EEM, look at some of the stocks, same stocks, Tencent, Alibaba, but you got some Koreans in there too, Samsung. You've got a mining company, Vale. And all of these companies, the one thing that all of these companies don't want to see, and this is the biggest warning that I see, is this dollar. Down today as the stocks are up and we're on risk on mode. But I think the dollar made a low. I think we made the low in June in the dollar, and we're going back up. And that does not portend well for the Asian stocks, for the FXI, and that has the potential to unravel all stocks, US stocks included. So just something to pay attention to. I know I am. If you guys like this video and you've seen it on YouTube, like it on YouTube, follow us at 𝗧𝗶𝗺𝗲. I do these videos every week and I enjoy doing them. Check out 𝗧𝗴𝗃.com. We've got some killer guys there that are unbelievable analysts, unbelievable traders. And check out me, Jeff Zananiri, at 𝗧𝗴𝗃.com. LFG guys, have a great weekend.